Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, September 24th, 2023. Hope you guys are having a fantastic weekend, and let's get started. So on Friday, I'd sent down that I said that if the Bears can continue to push the S&P below these the 4340 area, that we should see a magnetic pull down to the right around that 4304 and more likely down to the 42.63. These are, let's say, the first downside targets. So I'm going to be looking to take another half a position off. I want to run with just a quarter. We've been locking in 100-point gains the entire up and down. So right now, if we get down to these levels, it's going to be another 100-point gain on it, and from there we start letting loose of the extreme bearish view, and from there we're going to start looking for when to expect the long trade. We do know that from some of the dates that Woody has put out, so we still have a little bit of time on this. We want to manage it. Maybe we'll get another short trade involved, but right now things are going as planned. There's really not much more to add on it. I do expect the bulls to step in anywhere from the 4300 down to the 4260. I would not be getting aggressively short down here. If anything, I'd be looking at the plan that we're doing, and that's to start bailing out of the short positions, just taking quick scalps until we hit the expected low period. And from there, we start seeing extreme bearish sentiment readings and technicals that are giving us signals to look for a long position. So right now, just really just do things as we're being planned right now. There's not much else to really say. The Bulls are going to have to get price above the 44.35 level. This is going to get them out of short-term harm's way. Until then, the Bears are in control of the tape. We can see even on Friday, the Bulls tried to jump it up. I think it was up 20 at the highs, maybe a little bit more than that, and then we ended up finishing down 10 points. Now, in the morning notes, what I had said was, we're going to see some pretty good resistance right around that 43.60 level. We made it up to the 43.46. Actually, we had, this is actually the 22nd. Okay. So we did come up and we tested the 43.57. The Bears were waiting. They drove price down. A couple little late day, bounces up and down. But for the most part, once the Bulls ran into the resistance area, the Bears were waiting and they squatted it right down again. But notice that the energy of the drops are really starting to narrow down, meaning that there's really not a whole lot of energy, even though price is moving down. You can see that we have short-term buy signals on the 15-minute chart. We have a little bit on the 60, but I think another bounce and then down again, where we'll set up some bullish divergences. That's when we'll probably get a bigger rally somewhere up into the 4400 to close the gap. But as I said, this is why we want to scale out of our short positions. Maybe just, like I said, hold on to a quarter of a position, but we've already locked in, I think, 4 different 100-point gains on this move. So it hasn't been easy, but it's still, just taking the quick profits and stepping out and then reshorting again, has been the proper move on it. So for tomorrow, the first line in the sand, the Bulls got to get through to 43.77. If they do that, expect the 4400 to come into play. On the downside, start settling up some of the short positions, 4300, and then down at the 4260. So let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.